Okay, hold on a second. Rewind to May 2nd, 2025. The Supreme Court drops this. Well, it's basically a bombshell, isn't it?
Oh, absolutely.
JSW Steel, Bhushan Power and Steel. And this number, 22,000 crore rupees, just hanging in the balance for JSW. Did you see anything like this coming?
Honestly.
Yeah.
Not in the slightest. I mean, after all the approvals, the NCLT, the NCLT, the acquisition seemed pretty much done back in 2021.
Yeah, it looked like a sealed deal.
Exactly. So for the Supreme Court to step in now, what, 4 years later almost, and just completely pull the rug out, declare it illegal, order liquidation, that's a massive legal curveball.
Yeah.
Nobody really saw that coming.
It really makes you rethink how these big corporate takeovers, especially the insolvency ones, actually play out in India.
It does, definitely.
Right. So let's spend some time really digging into this. Our mission for this deep dive, if you like, is to understand what actually happened with this ruling. Why did the Supreme Court scrap the plan? What's the fallout for JSW, for the banks?
And the bigger picture too, right? What does this mean for the IBC, India's whole insolvency framework?
Exactly. Let's try and get everyone up to speed quickly on what is, frankly, a pretty significant financial and legal story unfolding.
Okay, so to really get the scale of this, you have to remember the context. JSW Steel, India's biggest steel maker,
Yeah.
led by Sajjan Jindal, they'd been eyeing Bhushan Power and Steel, BPSL, since, well, the whole process started around 2017, but their bid was approved later.
And BPSL wasn't just any company. It was seriously debt-ridden. What were the numbers again?
Huge. Over 47,000 crore owed to financial creditors, the banks, basically. And then another, 780 crore to operational creditors like suppliers. A massive, massive debt pile.
And BPSL was one of the originals, right? One of the first 12 big cases pushed into the IBC process back when it kicked off.
That's right, the so-called Dirty Dozen. It was meant to be a test case, in a way, for this new law.
A law designed to finally sort out India's bad loan problem in a, well, structured way, supposedly.
That was the whole idea. The IBC was meant to provide a clear path.
Yeah.
Either you rescue the company with a resolution plan from a new buyer, or, if that doesn't work, you liquidate it, sell off the assets.
So when JSW came in with their bid for BPSL offering, what was it, over 19,000 crore?
Yeah, around 19,350 crore for the financial creditors, plus some for the operational ones. A significant amount.
It looked like a textbook example of the IBC actually working.
It really did. The NCLT, the bankruptcy court, approved it. Then the appellate body, the NCLT, also gave it the okay. And by October 2021, JSW had taken control, got the majority stake.
And they weren't just sitting on it, right? They had plans.
Big plans. They were already adding capacity, planning to ramp up BPSL's steel output significantly by 2030. It looked like, a positive turnaround story was beginning.
Which just makes the Supreme Court's decision on May 2nd, 2025 feel even more like a shockwave. It wasn't just tweaking the plan.
No, not at all. They flat out called JSW's resolution plan illegal, and then the knockout blow, order BPSL to be liquidated.
Wow. It's like finishing a marathon, getting the medal, and then being told 2 years later you were disqualified from the start line.
That's a good analogy, actually. And the court gave two main reasons for this pretty drastic move. First up was what you could call the funding fiasco.
Okay, what was the issue there?
Well, the IBC rules, they generally mandate that these resolution plans should be funded primarily through equity, actual ownership stakes.
Right, skin in the game.
Exactly. But JSW's plan used a mix. Some equity, yes, but also a large chunk through something called optionally convertible debentures, or OCDs.
OCDs, so sort of like loans that might become shares later?
Kinda, yeah. And the Supreme Court basically said, nope, that's not good enough. They viewed it as violating the core principle of the IBC, which requires upfront equity infusion. It was like promising cash, but trying to pay partly with IOUs. That's how the court saw it.
Okay, so that was reason one. The funding structure didn't meet the IBC rules strictly enough. What was the second reason?
The second one was the delay debacle. Even after the NCLA gave the final approval back in, I think it was 2019 technically, there was a significant delay, basically 2 years before JSW actually implemented the plan fully and paid up.
2 years? That seems long.
The Supreme Court thought so too. And they didn't mince words. They called it a, quote, dishonest and fraudulent attempt to essentially game the system.
Whoa. Strong language.
Very strong. The implication, reading between the lines, was that maybe JSW was deliberately dragging its feet, perhaps waiting for steel prices to become more favorable before fully committing the funds.
So back to your marathon analogy, it's like waiting at the start line for 2 years, hoping the weather improves before you actually run.
Precisely. And the court felt this completely undermined the whole point of the IBC, which is supposed to be about timely resolution. You can't just sit on an approved plan indefinitely.
Makes sense. Now, did the court have anything to say about the others involved, like the banks who approved this plan in the first place?
Oh, yes. The Committee of Creditors, the COSI, which includes major players like SBI and PNB, they also came in for some pretty sharp criticism.
Yeah.
The court questioned their commercial wisdom in approving a plan with this funding structure and then sort of accepting the delays.
So the court felt the lenders should have been tougher, more diligent.
That seems to be the message. The court pointed out that the banks themselves had initially raised concerns about JSW's delays, but then seemed to back off. Their inconsistent stance didn't sit well with the court. It felt like they weren't rigorous enough.
Okay. And wasn't there someone else involved, the person overseeing the process?
The resolution professional, yeah.
You know what, Jeffy?
They also got criticized verbally. The court basically said the RP had utterly failed in their duties to make sure the plan was sound and implemented promptly.
So a real dressing down for multiple parties involved.
Pretty much everyone involved in letting the plan get approved and then delayed got given flack.
And the ultimate consequence of all this, BPSL gets liquidated.
Yes. Instead of JSW trying to revive it, the company's assets, the plant, the machinery, everything, will now be sold off piece by piece, basically, to pay back whatever debts can be covered. It's the outcome the IBC tries to avoid, but here we are.
A completely different ending than anyone expected just a short while ago.
Absolutely. Which brings us straight to the financial fallout. And for JSW Steel, it's potentially massive.
Let's talk numbers again. That 22,000 crore figure, where does that come from?
Okay, so roughly 19,700 crore was the actual acquisition payment. That's the big chunk. But then JSW had also apparently invested somewhere between 3,500 to 4,500 crore already into enhancing capacity at BPSL.
So money already spent on upgrades.
Exactly. Money plowed into the plant. So you add those up, and you're looking at around 22,000 crore potentially at risk for JSW if this liquidation goes through fully.
That is a staggering amount of money. I saw some analyst reports floating around. What's the expected hit to JSW's bottom line?
Yeah, analysts jumped on this quickly. CLSA, for instance, estimated BPSL could have contributed maybe 10–11% to JSW's EBITDA, their operating profit, over the next few years. Morgan Stanley called the ruling materially negative for JSW's growth. So yeah, a significant dent.
And the stock market reacted instantly.
Right, yeah. On May 2nd, the day of the ruling, JSW Steel's share price took a real tumble, closed down significantly. And I think it dipped even more, maybe 8% during the day.
Wow. Investors clearly spooked.
Definitely. And you saw it online too, right? People on social media immediately started talking about the impact on JSW's production capacity, their earnings. It hit home pretty fast.
Okay, so JSW takes a potential huge financial hit. What about the banks, the lenders like SBI and PNB who were supposed to get paid from the JSW deal?
Well, they're in a tough spot now too. Remember, they were expecting to recover that 19,350 crore from JSW.
Which would have been a pretty decent recovery, relatively speaking.
Exactly, especially compared to liquidation. Historically, under the IBC, when a company gets liquidated, the recovery rate for lenders is often incredibly low. We're talking maybe 6 or 7% on average, sometimes even less.
6 or 7%?
Yeah.
Compared to what they expected from JSW.
Well, JSW's plan was offering something closer to, what, maybe 40% or so of the admitted claims. The actual percentage depends on how you calculate, but way, way higher than typical liquidation values.
So the banks, like SBI, with its nearly 10,000 crore exposure, and PNB with over 7,000 crore, they're now facing the prospect of getting pennies on the dollar, essentially.
Potentially, yes. Much, much bigger losses than they had budgeted for based on the JSW resolution plan. It's a major setback for them.
And this whole saga, it inevitably casts a shadow over the IBC itself, doesn't it?
It really does. The IBC was hailed as this landmark reform, meant to bring certainty and speed to resolving insolvency. But when a high-profile case like this, involving India's largest steelmaker, gets approved, implemented to some extent, and then overturned years down the line,
It shakes confidence.
it has to. You know, we saw something similar, though different circumstances, with Jet Airways ending up in liquidation too. These big, messy cases raise questions.
I saw some legal experts quoted expressing concern that this ruling could make investors wary. Why bid for a distressed asset if the deal could unravel years later?
That's the fear. People like Adju Thomas from Equilaw mentioned the risk this poses even to acquisitions that seemed completed. Shiju PV from India Law stressed the need for certainty and timely value realization, exactly what this ruling seems to disrupt.
And there was a Business Standard editorial saying investors might be spooked. It's ironic, isn't it? The IBC was specifically designed to avoid liquidation.
Deeply ironic. Liquidation is meant to be the last resort. And the stats aren't pretty. In the last financial year, FY24, the total claims in IBC liquidation cases were enormous, like 11 lakh crore. But the amount actually recovered, a tiny fraction, just over 6%.
Just 6%. And JSW was offering what, closer to 42% recovery in this case?
Something like that, yes. It highlights the stark difference between a resolution, even a delayed one, and a liquidation scenario for creditors.
Now, there was another layer to this whole BPSL story, wasn't there? The Enforcement Directorate, the ED.
Ah, yes, the ED involvement. That's been a background thread for years. They got involved because of alleged fraud by the previous promoters of BPSL.
Right, allegations of diverting loan funds.
Exactly. And back in 2019, the ED actually attached or seized BPSL assets worth over 4,000 crore under the Prevention of Money Laundering Act, PMLA.
Which must have complicated JSW's takeover attempt.
It certainly did. The ED even initially argued that JSW shouldn't get the usual clean slate protection under the IBC. They claimed JSW was a related party because of some old joint venture in coal mining with the former BPSL guys.
A related party claim. That could have been serious.
It could have. And it led to accusations flying around. In 2020, the banks actually accused JSW in court of using the ED probe as an excuse to delay paying up for the acquisition. Advocate Abhishek Manu Singhvi, representing the banks, made that point quite strongly.
So things got pretty heated between JSW and the banks over the ED issue, too.
For a while, yes. But then things seemed to resolve on that front. In 2024, the Delhi High Court actually quashed the money laundering case against BPSL.
Okay, so the PMLA case went away.
And then later that year, December 2024, the ED actually handed the attached assets back to JSW. So it looked like that specific legal hurdle, the ED issue, was finally cleared.
But obviously, as we now know, clearing the ED hurdle wasn't the end of the legal troubles for this deal.
Not by a long shot. The Supreme Court ruling focused on entirely different issues, the funding structure and the delay.
So looking ahead now, what happens next? What are the options for JSW and the banks?
Well, JSW Steel put out a statement saying they're waiting for the full written court order to study it carefully before deciding their next move.
Which could be, what, appealing? Asking for a review?
A review petition to the Supreme Court itself is a possibility, or perhaps other legal avenues. The banks are likely considering similar options, trying to appeal or challenge the liquidation order. It feels like this legal battle might not be completely over yet.
But if the liquidation order stands, what are the concrete consequences for JSW? We talked about the money, but what about the actual steel plant?
Right. If liquidation proceeds, JSW loses that Rs 22,000 crore investment, potentially. And critically, they lose the BPSL plant itself that's about 4.5 million tons per annum of steelmaking capacity in Jharsuguda, Odisha.
And that was important strategically for them.
Very important. It was a key part of their expansion plans, especially strengthening their presence in eastern India. Losing that capacity would be a blow. Analysts estimate it could knock maybe 8–10% off their EBITDA and revenue next year, FY26, if the liquidation happens.
And what about BPSL itself? I mean, the company, the employees, it had been operating under JSW, right? Showing some profit even.
Yeah, BPSL had actually reported a profit in the first quarter of this fiscal year, though there was a loss in Q2, then a modest profit again in Q3. So some signs of operational improvement under JSW's management.
But liquidation changes everything for the employees.
Completely. Liquidation usually means significant job losses. And for the creditors, the banks, it means more delays and, as we discussed, a much lower recovery of their dues. PNB, for example, was apparently banking on recovering about Rs 3,800 crore from BPSL this fiscal year for their cash recovery targets. That hope seems dashed now.
So summing this all up, what are the key takeaways, the big lessons from this whole saga?
Well, I think the first major lesson is the critical importance of adhering strictly to the letter and spirit of the IBC rules.
Yeah.
No shortcuts on funding structures, no debenture shenanigans, as you might call it.
Right, and no playing games with delays.
Exactly. Timeliness is key. The second lesson seems to be about accountability. The Supreme Court's criticism suggests a need for greater diligence and, frankly, backbone from the Committee of Creditors and the resolution professionals. They need to properly scrutinize these plans and hold bidders accountable.
Absolutely. And what about the broader implications for the IBC framework itself? Does this damage its credibility?
It certainly raises concerns. As we said, if approved plans can be overturned years later, it creates uncertainty. The Financial Express called it a severe blow to the IBC's credibility. It might make investors pause.
So the core message from the Supreme Court seems pretty clear. Follow the rules, act fast, and everyone involved, bidders, banks, RPs, needs to do their job properly.
That sums it up well. The integrity of the process is paramount.
And for JSW Steel, this is a major challenge, obviously.
No doubt, it's a significant setback. But JSW is a large, resilient company. They'll likely pursue legal options, as we discussed. How they navigate this, whether through review petitions or dealing with the liquidation process if it comes to that, will be crucial to watch.
It really feels like this case highlights the need for policymakers, perhaps, to look again at the IBC processes, maybe refine things to ensure both adherence to the rules and the kind of investor certainty needed to make the system work effectively long-term.
That's a key point. Finding that balance between strict compliance and practical, timely resolutions that preserve value is the ongoing challenge for the IBC.
Well, this has certainly been a fascinating, if complex, deep dive. The Supreme Court's decision on JSW and BPSL is definitely more than just another corporate news item. It feels like a landmark moment, really, for India's steel industry, and maybe more importantly, for the country's entire insolvency resolution framework.
It really underscores the high stakes involved, doesn't it? That delicate interplay between corporate ambition, the complexities of regulation, and the sometimes unpredictable nature of the legal system.
Absolutely. And you get the feeling the story isn't quite finished yet. There could still be more chapters to come. Definitely one to keep an eye on.